Before this story ends, you'll understand why traders lose control even when their analysis is right, why discipline quietly breaks after small losses, and how one single decision can change an entire trading day. Stay with the story, because the lesson doesn't come from the loss. It comes from what happened after. The trade looked perfect. Clean structure, clear direction, defined risk. One of those setups that makes a trader sit straighter in the chair. He had waited for it, all morning. But the market hadn't been kind before this moment. 2 trades had already failed. Not big losses, nothing dramatic, just small stop-loss hits. The kind that don't damage the account, but quietly disturb the mind. By the time this setup appeared, he wasn't trading the chart anymore. He was trading the day. He entered the trade. Price moved slightly in his favor. Not much, but enough to create relief. Finally, that small green move felt bigger than it was, because emotionally, he needed it. Then the market paused. No continuation, no momentum, just candles moving sideways. Silence. And silence in the market is uncomfortable. The stop-loss was clear, placed exactly where it should be, logical, clean. But as price slowly drifted closer to it, the mind started talking. It's just a pullback. It won't hit. They're trapping weak hands. So he did something small, something many traders don't even count as a mistake. He moved the stop, just a little. That moment didn't feel emotional. It felt smart. It felt like control. Price dipped again. Now the loss looked uncomfortable, not painful, just irritating. He imagined closing the trade, another red trade, another failure. So he didn't. He waited. Hope quietly replaced discipline. This is where most traders lose control. Not at entry, not at analysis, but at acceptance. He hadn't accepted the loss. He thought he had, but the moment proved otherwise. Then it happened. A strong candle, fast, decisive. The level broke. The loss doubled. Now panic arrived. Not loud panic, silent panic, the kind where thoughts slow down and the chest feels heavy. He stared at the screen, frozen. And finally, he closed the trade. Not because of the system, because he couldn't take it anymore. The moment he exited, price reversed. Slowly, calmly, almost respectfully. The chart moved exactly how it was expected to earlier, just without him. That moment stays with a trader, more than the loss, because now it's not about money, it's about discipline. He leaned back, eyes tired, mind heavier than the account. And for the first time that day, the market wasn't blamed. The trade didn't break the account. It broke discipline. And discipline, once broken, is harder to rebuild than money. The market didn't punish him. It simply continued. It exposed the exact moment where uncertainty stopped being accepted. That was the real loss. From that day on, the focus changed. Not on winning, not on recovering, but on one question before every trade. Has this loss already been accepted? If the answer was no, the trade wasn't taken. Because a trader who hasn't accepted risk has already lost control. Here's what that trade revealed. Discipline doesn't break suddenly. It erodes slowly. Small losses damage the mind more than the account. Moving a stop-loss is rarely about logic. It's about comfort. The market doesn't take money. Traders give it back emotionally. Acceptance of risk isn't a concept. It's a decision made before entry. And most importantly, losses don't destroy traders. Decisions made after discomfort do. The market is not cruel, it's honest. It shows you exactly where discipline ends. And if you're willing to see that moment clearly, that's where real trading begins.